Hey YouTube, this is Zach with the Gillies Financial. We are back with another video. Today we're going to be looking at the recent Salesforce earnings that came out today. We're going to be looking at my most recent trades. We're going to talk a little bit about the market as a whole, as well as the trades that I'm looking at for later this week, which include potential plays on the CRM earnings that we saw today, as well as the fact that we still have Dollar General and Dollar Tree that are going to be reporting later this week. So let's get started and dive right in. As you can see here on the screen, I do have SPY, the S&P 500 Trust, which is just an ETF tracking the S&P 500. I've got it on the month chart right here just because you can see that once again today we've hit another set of all-time highs, and it's been truly mind-blowing the fact that we still haven't slowed down at this point in time. A lot of this is optimism. A lot of this is crazy at this point in time. You can really see just how much of a recovery from a stock perspective has been made, where we've actually surpassed the highs in February, where at that point in time, a lot of people were saying that they have this expectation or this belief that stocks were overvalued then, and that was prior to really getting to the point where we're at today. Now, that being said, I do think that we're going to continue to go higher, at least through the remainder of this quarter. Things are going to slow down now until we see earnings at the end of September, really the beginning of November is when those will start back up. So September is going to be a quiet month, although we are building into the election. So you have to remember that both parties have very different policies when it comes to stocks, when it comes to taxes, in particular both capital gains tax as well as corporate income tax. So there's going to be a lot of debate surrounding what we're going to see there, but anticipate to continue seeing some moves just associated with everything you see here on the screen. So let's dive in to highlight some of the trades that I made this week, or rather just today. So I want to focus on the TD Ameritrade trades that you see here on the screen. This was not my best week. We've been on a bit of a win streak, and I got greedy today, and then I got scared. Both are two things you really don't want to be doing when you are buying and selling options. As you can see, I did buy my 3 Facebook calls. I bought one at the beginning of the day yesterday off that spike, and then I bought the other 2 to get that average cost down. And as you can see right there, I sold the 3 of them today for a loss, and that was about $100 loss on there. That was pretty frustrating because if I had held on for even just till the end of the day, Facebook kept going higher and higher, and I would have essentially had 100% return if I had just waited another 3 hours. And I'm not saying that as a coulda, woulda, shoulda. I'm saying that you have to remember sometimes the reason why you bought or sold a stock in the first place. And this is why I generally don't play weeklies, but I was pretty confident on Facebook on this one, and it was just one that I followed the right mindset, but I was looking at the broader market a little bit too often. So that being said, I am going to put that behind me. I'll be okay there. What I did do today is I purchased some call options on Bank of America, as well as I added to my position there just with some of my cash on hand. And the reason for this is because I think that tomorrow, before the Fed discussion and the Fed meeting at Jackson Hole on Thursday, I think we're going to see a little bit of a run-up in banks. And I think that my goal for this is to sell some of these options prior to that conversation. And if I can sell these options and get a profit, then I can go into that conversation just watching that volatility and hopefully being able to profit off of some positive news there. However, I'm not going to be concerned if I can ride some of that volatility upwards tomorrow and then sell off and make the play free. So that's my plan for tomorrow in terms of what I'd like to do with that BAC holding right there. And again, I want to highlight that those are for next week, September 4th, and those are $27 calls, and I got them right there for 19 cents. So you can see that here on the screen where I've got those weekly calls. Again, we're still back above where we were a week ago, so there already has been that run up. What I'm really looking to do is capture some of this momentum if we see that tomorrow morning. I do plan to sell within 5 minutes of open if I see this happen, even though there may be some additional run up. I do want to play that volatility and kind of see if there's going to be some volume there at the beginning of the day. This is Bank of America. that is the trade that I'm looking for, is if we see a repeat of this right here tomorrow morning. So that's what I'm going to be watching. The other stock that I will just showcase for you guys as to where I pulled out on this second up as soon as it started going down a little bit. And as you can see just by the remainder of the graph, that is foolish. So those stocks that you just saw me trade, I will just showcase what they are going for right now, 175. And as you saw, I sold all three of those for, I think, 202, I think was that price. So it was not fun, not my best moment, but that is okay because, again, you're not always going to win, and that'll help keep me humble. So that's what we were looking at there. So I do like Facebook for the remainder of this week, but I'd like to see them come off this run up right here. I think part of this breakout is already occurred. I don't think we may see that run up to 300 at a good price right now. I do think they are going to hit 300, not at the end of this week, but if we go out to the end of September, this is very expensive for that move, especially if they stall, kind of like we saw. We did see it about a month ago. If we see some of this action right here where they're trading sideways, then we can continue to get stuck and lose out on $500. That's an expensive trade. I would not encourage anyone to take that, but this is very similar to, or rather this week is what we saw happen here, and then we saw that happen to Microsoft as well. And if you remember from our watch list at the beginning of this week, this was the trade that we were looking for, is this bump here as well as that bump there. So I think we may hit 220 by the end of the week, which we had that trade from Friday where we did pretty well on that one as well. So these are both trades that were on the watch list where we discuss economic indicators and the plan for the week. So make sure you're watching that on Sundays. So let's just talk about the Dollar Tree play. So we've got Dollar Tree or Dollar General and Dollar Tree that are going to be announcing earnings on Thursday. So you can see on the monthly that they've continued to perform very well. Let me go ahead and actually show the year to date. These are smaller plays that have seen a lot of success in a COVID world. There's been a huge increase in both sales as well as recurring customers for both Dollar Tree as well as Dollar General, and I'm really going to tie both of them together. The really only difference between the two of them is Dollar General trades around $200 a share, where Dollar Tree trades around $100 a share. As you can see, we still are trading around all-time highs. I don't know if I plan on playing the actual move, and the reason for that is because right now when we're looking at the options trades, they're pretty expensive and they're pricing in a decent move for something that I don't have a lot of confidence in. And what I mean by that, you can see right here that they're expecting the stock to move really right at 2% for earnings, and that's from the current price. And I don't know if I agree with that, especially if they have that run up. So I would rather play the run up, or I would back out of it, because this is pretty expensive for a stock that has already moved a lot. And we've also seen that the but the grocers have already said that people were buying a lot when the stimulus money was around. And I don't think that we're going to necessarily see a decrease, but I think the forward-looking guidance is going to say, hey, this is our expectation, and we're not seeing a lot of huge changes at that point in time. If that is the case, then that means that it's probably going to lay flat, which means an iron condor may be applicable. However, I think that that is a trade that you can lose a lot on for a stock that has been volatile in the past, and you can see some of that volume just trades here. You can see, again, the stock can move at a given time, although this is the 3-month chart, but just be aware of that and continue to watch that. So there's a lot going on. There's a lot happening in this market. We did some review today. What I would highlight going forward is make sure that you're able to evaluate some of these tech stocks. I think there are going to continue to be plays there, but they're going to be expensive, and they may require big moves on these companies that are already pretty overvalued. That doesn't mean that the stock won't continue to go up. I just want to remind you that there are going to continuously be changes associated with those. A key component of that would be Salesforce, which announced today This is a company that I had a video made for yesterday to play earnings, and then they announced the fact that they had already, or they were being added to the Dow Jones. And you can see the effect that that had. Let me put it on the day. So already it had a big spike up. It opened pretty big today. And that was a pretty big fact for a company like Salesforce, that they opened up so much higher. I mean, it was not a small move. We're talking another 5%. And then they announced that they had 5 billion in earnings, and they just crushed it. As you can see right here, they are up 18%. And this was like a $35 move. So this was not a small move for them. You can see that here again. We went from right at 215, 216, and they're currently at 246, which is higher than that initial announcement. So just if you had done the trade I was looking at yesterday was to go to 210 for $500, and that would be like 4 or 5 grand right now. So these are the companies that you got to watch. Are they a little overvalued? Yes. But that doesn't mean they're not going to go up from a stock price perspective. So pay attention to these. I think we're going to have an interesting remainder of this week. I think there's going to be a lot of news coming out this Thursday. So keep all that in mind. If you found this content helpful, please drop a like down below. And if you want to become a member of the team, go ahead and hit that subscribe button and follow me on Instagram. I appreciate all of you for watching. Thank you, and I'll talk to you soon.